Alright, I want to just make a video with some thoughts of mine on the incredible, massive, historic sell-off over the last week. Now, the first thing I want you to notice is how fucking big this is. This is just a monstrous sell-off. It is the third biggest six-day fall in 75 years, and the only ones bigger were in 2008, 2001, and the next biggest one was in 87. Now, the difference between those was that 87 was kind of a fall off the plate sort of event. If we take a look at 87, let's see if my charts go back that far. I do have charts that go back that far. So 87 came... No, my charts don't go back that far. Maybe they do? No, they don't. Anyway, 87 was much like this. It just happened out of the blue. 2008, the big falls happened when we were already a long way in, and the same in 2001. So this is very, very different than what happened then. Now, couple of things I want to point out. If you look at a big picture view, still a bull market, still very obviously a bull market. What type of bull market has it become? Once we broke out from here, it changed from being a decreasing volatility bull market, a very slow, boring, just plotting, every month you make money type deal, to here, now it's a wild and woolly like roller coaster. So this price action in itself is not inconsistent with bull market. I don't think you can necessarily say that the bull market is over. Now, couple of things. The price action last week was much, much more bearish than we would expect. I thought about here, I thought we would get a bounce fairly soon. Any potential bounce points, like this potential bounce point, this potential bounce point, maybe we get one here, have sliced through resistance. So what that tells us is that the market was at a position that it was ready to sell off, and sell off it did. Now, the magnitude of this sell-off means that things have changed. So a lot of people who would have just held if the dip went to about here and waiting for new highs are now planning on exiting. And so what we have to take into account is that there's a heap of people I know who got freaked out by this last week, and if we get back up to here, they're going to say, I'll take some off the table, and you know, especially 401k people and retirement account people, they're going to say, oh, it's time to be a bit cautious here. And so the overwhelming probability now is that we get a second leg down. And what does that look like? It looks like a move. No one knows the exact moves, but it looks like something like this. So my charting skills are retarded. So a move up to there, and then a move down, you know, roughly equidistant. And that would be enough to freak people out. Now, if we look at the last time this happened in last year, we had that. Actually, let's go back and have a look. We have that big fall, strong rally, and then it fell again. At Christmas time, it looked like everything was fucked. And then we had a very, very strong rally, made fresh highs, and we're off to the races again. Okay, so I think that's a rough roadmap for what's going to happen. I think this was game-changing price action. How serious is the coronavirus? It's not the amount of people that it's killed. It's not that it's not that whole, it's just a flu. That's just nonsense. I have been walking around cities in Asia that should be vibrant and buzzing with commerce, and they're ghost towns, and the Chinese economy is literally just shut down, like completely shut down. I've got friends in China that they can't go outside. In Beijing, it's like everyone's working from home. That is a definite break on the world economy, and it could and probably will spread to America because the American response hasn't been so sharp. up to now. That could happen. But we're dealing with things that we don't know yet, that haven't happened yet. Now, so what do we know? We're going to get a bounce. Absolutely 100% we know we're going to get a bounce. This is not the time to be going short. We just opened at the start of the week. This is the Asian session. This is what's happened. But what we typically, on the short side, you see capitulation when everything moves together. So when correlations go to 1, that's typically the end of a short move. And we saw this move down on gold. Gold should be a safe haven, non-correlated gold. Took it right in the neck like everything else did. But gold has opened up stronger, whereas the stock market has opened up weaker. The bond futures, straight capitulation on Friday, opened up a little weaker. So what that's leading to me is to think is that there will be some sort of coordinated buying, face-ripping rally, probably today, but at least in the next week. I would be very surprised if we didn't close this week higher, but I would also be very surprised if we didn't trade at some point lower than here. We could just now. The big thing for this market is that if we trade above here, it's going to go very, very quickly to the upside because all the people who got out here will be forced to get back in. So that's the thing that you have to take into account in your calculations right now is where are we? I wouldn't be short here. I think this is a really good market to stay away from. If you look at other bear markets, the real money in 2008 wasn't in shorting equities. The real money was in crude oil and Australian dollar and things like that. So that is where I'd be looking. I would stay the hell away from the equity market. It's not a good sandpit to play in for this week, and that's just my opinion.